Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Smash that like button. All right, ladies and gentlemen. So, first things first, let's go ahead and remove the banner so we can get to it. All right, what's going on, Ethan? Yeah, it's a late one. I did not want it to be this late because I got to wake up early tomorrow. What's going on, Clover retirement? James, what's going on? Ready for the week? Hopefully not an ask again. I think might be midnight pump. Let's go. Past my bedtime. Hurry the hell up. Let's go. I'm an old fart now. Yeah, me too, man. Me too. Oh, man. All right. So, first things first, we're going to talk about a couple things. Market, what to expect. April 2nd's kind of, Liberation Day. It seems so climactic, right? So let's see if, what happens there. But very quickly, yesterday we made a video regarding this new generative AI feature that we just released. I'm going to show you it in action real quick. I'm very excited. This is incredible. It's an incredible fleet. This is I would say we're still going to use our old logo, right? Because that one's patented, and this one obviously is this is going to be trademarked soon. We have a couple codes that we've sent on in for patent, and so we're going to be doing that, and probably going to add this one to the trademark as well. But as you can see here, this is the generative AI, generative AI at your fingertips. By far, one of the only few companies out there that is doing this, and I'm very excited to share it with you all. So you can see, again, we're in the digital age now, and we're about to bring things to you that you could only have dreamed of. So very quickly, just first off, the markets are kind of red right now, so we'll talk about that. But I posted this video. Make sure you watch it. I'm just kind of a very quick. Let's go ahead and see this. I'm very proud of what I spent to create this. It's really beautiful. So let's take some time and let's watch it here. So this is the generative AI feature I'm going to show you right now. You'll see how beautiful it is. This is looking up the company Tesla. Enjoy. So by the way, I paused it. This is where the AI is. Look how sexy it is. Are you ready? Anywho, ladies and gentlemen, as you can see here, this is only available to lifetime access members as an add-on. This is not available to the general public, except the hedge funds that are interested. We had two come in. One has put in a payment. The other one's pending. So that's pretty impressive. They saw my video yesterday. So shout out to you guys for watching. That's incredible what we created. But yeah, this is not open to the public, just as an add-on to lifetime access. This feature here. Very quickly, quantum charts, all the stuff that you see there, all those graphs, those will all run through generative AI. They're going to all run through that, and they're going to give recommendations, analysis. Again, educational platform. Take it as such. This is Tesla, and this is really smart. Watch this. Assess growth catalysts. Evaluate progress in new revenue streams. AI, full self-driving, robotics, energy storage, to gauge long-term repentance. I mean, look, guys, that's huge. Also, I mean, robotics, right? So it's highly intuitive. It shows you that, hey, the cash flow. Let's see if we can just kind of read it real quick because I think it's pretty cool. Look at this. So here's cash flow expenditures. Operating cash flow grew steadily, reaching $14.9 billion in 2024. Here's the negative. Free cash flow declined to $3.6 billion in 2024 from $7.68 billion in 2022 due to rising costs. So it's telling you, this is not good, right? So, there's like, so it's there's good and bad. And then we could kind of wait. And then recommendation is, cautious optimism. Tesla is high risk right now, high reward, best suited for growth investors because of the free cash flow. Because the free cash flow has gone down, and you can see it here. Look at their free cash flow. I mean, this free cash flow has gone from 7 billion, 4 billion to 3 billion. The free cash flow has gone down. You can just see it in this graph. And what this does is AI goes ahead and analyzes all that data and puts it in a digestible format. And you know how much time it's going to save people? And sometimes you may not look at a number, you might omit a number, but then this AI catches it and says, hey, something's wrong here. And it's it just gives you these recommendations. So again, very, very helpful. It's going to get smarter. It's going to get better. It's going to get upgraded. You guys know how it works, right? So there's that. So now that we talked about that, we're going to go ahead and apply this to Clover Health to see what Clover Health says, right? And we're going to have two different types of outputs. I'll show you, but very quickly, let's remove this screen for a sec. And let's just share the normal screen so I can hop to another tab. So now that we talked about this on Friday, let me just lower the brightness here because I'm just blinding myself. On Friday, we went ahead and talked about how the stock market dropped to key levels at support and potentially past support, meaning that if the stock doesn't hold on Monday, we're probably going to expect to see lower lows. There was a lot of technical damage that was done on Friday. Now, interestingly, everyone's beating the drums of a recession. But if you go ahead and look at the macroeconomic event, or just not even that, just look at the stock market in general, let's say for China and Europe, those stocks, Chinese stocks are not falling. If it's true the U.S. is going to be in a recession, then wouldn't you think, again, go back to 2008 and look at the global financial crisis, or go back to our 42-page paper regarding every recession that had happened in the history. Usually it's a global, it's felt globally. So I don't know. I don't think the recession is going to happen. I think people are just beating the drums. And usually when people think usually it's not going to happen. So we'll see. There's that. The big thing is Trump did step back in his comments because if he, some polls came back and Trump polls are negatively affecting him now. I think it was 45 people think that they were better off with him because of that November bump. And that November bump is pretty much gone, if not lower. And then now people are saying that 26%, so it's decreased. A lot of people now think that they actually are worse off with Donald Trump in office. So this is important because now the midterms are like 15 months away. So this is going to, again, these politics is quick, right? Democrats are playing it smart. What's his name? That gentleman with the avocado and beer. Senate Minority Leader Chuck Schumer. There it is. I had to say his title, Chuck Schumer. He's playing smart. He did not stop the government, and he said, "I'm just going to let Trump mess up, and then they're going to be able to win the midterms." I think that's what they're banking on. So Trump needs to figure this out because now Tesla investors are wanting Elon back, and they're like, "This is ridiculous. I'm not trying to lose money on this quest that Elon's trying to do." Then Elon, again, the stock price is down, down 30%. In fact, it got cut in half. And then now it's kind of back to where it was, here, if not a little better, but still, I mean, it's not good. Stock got cut in half. Tim Waltz was like celebrating it, even though the Minnesota pension is invested in Tesla. Kind of just odd there, but regardless, Tesla investors are pissed right now because, like, hey, they're like, what the hell, Elon? You are the CEO of Tesla. You are not, like, get out of here, right? So that's a big deal, right? So they're pissed off, and remember, there's like litigation regarding Elon, regarding his compensation package. Imagine trying to piss off Tesla investors, and all of a sudden they let's say they re-vote back. They might hurt his comp. Again, there's a lot of politics involved when it becomes being the CEO of a company. The fact that of the matter in regards to Trump, he doesn't want Elon to leave. But if this stock market's getting pressured and getting hit hard, Elon's going to have to leave, and then Trump is not going to have Elon. So the Trump put's going to come back. Also on Friday, you're going to get Federal Chairman Jerome Powell talk about the economy. And I think he's going to be pretty dovish instead of hawkish. So right now, if you look at the number of rate cuts went up to 3 by the end of the year, December. So the Federal Reserve said they're going to get 2 rate cuts. Now the market's pricing in 3, given this. I mean, what Trump is doing is working, but the thing is, it's getting to a point where it's starting to hurt. The administration is starting to feel the pain now. The Americans felt it too. Now the administration's feeling it, and it's time to, I think, a lot of these tariffs and things are, we're going to see what happens, but he's going to end up flipping the switch, and we are going to get a crazy rally. It's just right now kind of the waiting game. So there's that. What else we need to talk about? Okay, so there's that. Let's go ahead and activate this. Let me increase the brightness now because it's a little dark here. So let's go ahead and open up Clove. So we open up Clove, and here it is. This is part of our premium stock terminal, and people forget free cash flow. You just click here and read it and see how it's calculated. A little X there. You want to look at revenue. Revenue's gone up and down, and it's slowly creeping back up. So I'm excited there. Free cash flow is finally positive, and here's the AI summary. But check this out. You do enhance AI analysis, and this pops up. Now, we already talked about this in the last video. I'm not going to go over this, right? What I am going to go over is this is a new feature. This is generative AI. And what it does, it takes everything here and even more behind the curtains. And it really gives you some really cool stuff. So we're going to press it, and it says synthesizing strategic financial intelligence. And we're just going to wait, right? We're going to wait. And right now what it does is it's taking in all the information, and even over like just 3,000 pages is so much information. It takes in all that, and it conglomerates the info, and then it parcellates it, and then it finds patterns, and then it goes in and it generates it to you in real time. And it's really fast, right? Because you have a higher level model of thinking, one of the best models, right? And it goes in and it gives you the analysis here, right? So it conglomerates everything and puts it in an analysis, but it's not information overload. It doesn't give you like 20 pages because what's the point of that? Might as well just look at the data. It brings it to you in a very sophisticated manner. It writes the recommendations and also the strategic financial intelligence up top. And it does it in such a way of just pure elegance. This is a very powerful tool, and this does not exist in the stock market. Bloomberg does not have this, right? So let's go ahead and zoom in so we can kind of read this. So comprehensive financial analysis of Clove revenue trends. So the annual revenue grew rapidly from 281 million in 2018. This was pre-SPAC, right? To 1.47 billion in 2021, but declined to 1.1 before recovering to 1.37 billion. Again, they removed the non-insurance side. So if you focus purely on the insurance business, it's always been growing really well. The key issue here in 2022 saw a 25% year-over-year drop, which is 3.62 standard deviations low, signaling operational challenges, which is true. In 2022, they did see operational challenges. Then in 2023, we got a recovery, which suggests stabilization. The unfortunate part is I was beating the table regarding Clover being good. But unfortunately, people sold, and, that's how we got 60 cents, right? So then it goes in and analyzes the quarterly. So what it does is it analyzes both annual and quarterly. It does both analysis. So it's like having multiple eyes in different places. So revenue sharp decline in Q1 2023, which is negative 64.2%, Z-score of negative 20. But in Q4, rebounded 66.7%, which is 2.92. Implications, volatile raises concerns of predictability because, Clover was definitely unpredictable at quite some time. So that's what it's analyzing. Profitability, well, here, gross margins improved significantly from negative 5.4% in 2021 to 26.6% in 2024, indicating better cost control. Thank you, Scott Leffler, right? Quarterly Q2 2024, we got a, what's it called? It was a GM hit. Oh, good. 30.3% multi-hair. So I got to figure out what the hell is this. What is good morning? So they got a good morning hit. I got to figure out that metric. You see, this is the beautiful part about this is, let's see if I'm getting this right. Let's see. Oh, gross margin. I'm tired, guys. I'm tired. I get it because a good morning hit. Good morning. I was like, what's GM? Yeah, it's gross margin. So yeah, so Q2 2024, they got a GM hit of 30%, a multi-year high. I didn't know this. You see, I again, this is something I didn't know. So if I were to go to quarterly now, I go to gross margins. I'm like, let me see. There it is, 30% Q2. And you know what? That guess what? That was, isn't that when they were they were profitable that year, that quarter. Remember that quarter? So that's pretty impressive. You see, so the point is, it gives you, imagine doing this. You know how long this will take you to look at a company? This does it for you. I mean, holy crap. It is your eyes. Okay. All right. What else? Operating net income persistent losses, but narrowing. That's good. So it's a narrowing loss. Operating loss improved from negative 637 million to negative 45.8 million. Ooh, that's an improvement. Net loss narrowed to negative 43 million in 2024 versus negative 588 million. Guys, these are, I mean, reading these numbers, that's a big narrower. Holy moly, right? So positive Q2 2024 saw positive operating income of 7.2 million for the first time. So it shows you for the first time it was positive net income. Earnings per share improved negative 125 to negative 0.08, right? So you can see improvement. So now let's look at cash flow and liquidity. Operating cash flow turned positive in 2024, 34.8 million versus negative 282 million. So that's a big improvement. Free cash flow positive in 2024 with positive 33.3 million, a major turnaround from the business, which is negative 283 million in 2021. Quarterly Q2 2024 FCF was 44.4 million, reinforcing sustainability. So again, you see how it collects all the data and it creates a narrative, right? Working capital declined from 380 to 130 in 2024, but remains adequate. Okay, so this is something we got to look at, right? This is so it's a little check mark. Okay, we got to look at working capital, right? Valuations and market sentiment. So PE ratio highly volatile. Negative 49 to negative 35. So reflecting skepticism, right? It makes sense because, it's still unprofitable, right? Price to sales ratio dropped 10.1 to 1.1, suggesting undervaluation if margins improve. There it is, right? And soon this is going to be intrinsic value, which is why we're going to have a lot of upgrades, right? So key positives, margin expansion, right? Gross margins up 1,100 basis points since 2021. Now, let me go ahead and let me explain to you something. I'm going to repeat this again. Okay. Margin expansion. Gross margins up 1,100 basis points since 2021. I'm going to say it again. Gross margin up 1,100 basis points. Up 1,100 basis points. 1,100 basis points. 1,100 basis points. I'm going to say it again. 1,100 basis points. One more time. 1,100 basis points. What does that sound to you? MCR improves by at least 1,000 basis points. 1,000 basis points. Guys, this is the Clover Assistant, potentially. 1,100 basis points. Okay? Right? Okay, let's continue. Sorry for being annoying, but I wanted you to figure it out before, but if you didn't, I just said the answer. All right. Cash flow breakthrough, positive FCF in 2024 signals self-sufficiency. Cost discipline, operating losses narrowed by 93% since 2021. That is huge. Key risks, revenue volatility, sharp quarterly drop in Q1 2023, negative 64% indicates instability. Guess what? That's no longer going to be a risk anymore because they are essentially going to increase revenue. Profitability lag, despite progress, net losses persist. Okay, we got to look at that, because what happens if this new revenue growth they're going to get is going to make profitability worse? Share dilution. Shares outstanding grew literally 10x, 1,000% since 2018. Again, pre-SPAC, you really can't do that. But again, this hurts EPS. Okay. So we got to look at the shares, right? Stock price implications. Bull case. If margins expansion, which means gross margins get better, and FCF positivity continues, price to sales re-rating to 2x could drive upside. So it's saying that potentially that we could get a 2x in price to sales. So what would that look like? Well, if they're going to be $1.85 billion, then it would be 3.7. So again, right? So if it's 2, if the price of sales could go to 2, right? Then you just take the whatever revenue they're going to get in 2025, which we said 1.85, multiply that by 2, you get 3.7 billion. And we know you just multiply that by 2. So the stock price, it's saying, could potentially go to $7.4. So essentially $7.40, right? So you see how powerful this AI feature is, and there's no hallucinations. Okay. All right. So there's that. Bear case, prolonged losses or revenue decline may sustain negative PE. So if it's saying that, hey, if the revenue declines, which I don't think is going to happen because the revenue is going to go up, we know they have more people, but prolonged losses how unprofitable are these people? Well, you know what? Peter also did say that, a lot of these are switchers, and potentially switchers already have medical data, which means potentially they could not be as unprofitable as what one might think. Okay. Let's see. Long-term outlook, potential, scalable margins, and cash flow sustainability could attract investors, aka hedge funds, right? When you're starting to see that now. And don't worry, we'll have the generate insights in the quantum charts to analyze all that information. Like I promised you, this is going to be taking you from 0 to hero. I'm going to teach you how to read the data and interpret the data, what it means. But the problem is like, if you like this add-on feature, you don't even have to think anymore. It does everything for you, right? So challenges. Must prove revenue growth isn't resilient on a one-time factor. So again, like, could this be just a one-time factor? Like, oh, they just got switchers, right? We know that they're going to get 4 stars, and that's going to increase the amount of growth, right? So we know that they're going to get paid 4 stars in 2026. So it's only going to get better. So final verdict, CLOV shows operational improvement, but remains a high-risk bet. The stock could reward patience if margins and cash flow trends hold, which is what we talked about. Remember? Right? So we talked about this. You change your name all the time. Ferguson. I would call you Ferguson, right? That's how I know you by Ferguson. We talked about this on Discord, right? We talked about it. We got to look at Q1, right? But volatility and dilution remain headwinds. Now, again, because they're free cash flow positive, I don't think they're going to dilute. However, this AI is saying it, and I do agree with it, because you know what? The reason why is because they need to dilute shareholders in order to grow Counterpart Assistant. But the question is, when are they going to dilute shareholders? And when are we okay with dilution? I think shareholders are going to be okay with dilution at $25, right? Or $15 or $25. Because then when it gets to $25, we're going to want the stock to go to $75. But in order to go to $75, we may need some dilution. Unless they might not even need to dilute, and they could just use the profitable section of New Jersey to fund the operations globally, in terms of the United States, nationally, right? So investors should monitor 2025 profitability milestones closely. All right, so let's go ahead and look at the recommendations, shall we? All right, ready? So number 1, monitor margin trends. Track quarterly gross and operating margins to ensure continued improvements, especially looking for sustained levels above 25%. That's great. You see, the beautiful part is now if you're learning and trying to learn to be an investor, imagine having this guiding you for every stock you're looking at, right? Number 2, assess revenue stability. Watch for consistent revenue growth in upcoming quarters to confirm the 2023 to 2024 recovery isn't temporary. We know that number 2 is, yes, it is stable as of for this year, because we have the numbers that came out and they also came out too, remember, right? Number 3, this is a big one, guys. Evaluate cash flow sustainability. Prioritize evidence of recurring positive free cash flow in future reports to validate financial self-sufficiency. So again, so you can see that everything that this is discussing, we've spent hours and hours and hours on doing due diligence. Can you see how it automatically does it for you? You see how much time this can save, right? So watch for profitability milestones. Look for net income turning positive, right? Or further narrowing losses, particularly after Q2 2024's operating income breakthrough. So it says, hey, we had a breakthrough in Q2 last year. Remember when it was net income positive? Let's go back up here. Here's net income. No. On the quarterly, here's net income. And here it is positive right there. You don't believe me? Let's go ahead and let's remove free cash flow. Let's look right here. There is positive. It's talking about this. And you see how it's able to essentially extract the data? All right, let's go back. Consider valuation metrics. If price of sales remains low, 1.1, while margins expand, assess potential under evaluation for long-term entry points. Good. Mitigation dilution risk. Monitor share issuance trends. Avoid aggressive positioning until dilution stabilizes. This is very important because imagine AMC, right? A lot of those shareholders that bought before, they got diluted, right? Number 7, balance risk reward. Weigh the stock's high risk profile against improving fundamentals. Consider smaller phased investments rather than larger commitments, right? So you can see how risk averse this is, right? 8, stay up to date on guidance. Review management's 2025 forecast for clarity on growth drivers and profitability timelines, right? 9, diversify exposure. Given volatility, limit CLOV's weight in portfolio until it demonstrates consistent execution, right? Again, all of these things are what hedge funds are doing now, okay? The thing is, we know a lot about the company. Number 10, this is the sad part, okay? Exit if fundamentals deteriorate. Be prepared to sell if revenue declines or declines resume or margins regress, right? So you can see how there is no emotion here, right? There is no emotion. It just tells it how it is, okay? So the stock doesn't care about you, right? So, right? And Andrew doesn't care about you, right? So now that we have this, what are things to look forward to in the future? So in the future, what's going to end up happening is our premium Al Stock Trades terminal is going to automatically pull information directly from all of the reports. Every time they go to Leerink, every time they go to JP Morgan Chase, every time a company goes to some type of event, this AI is going to be there listening. The AI is going to be there listening. Okay. Every time they post quarterly results, every time they talk on earnings reports, the AI is going to be there listening. And as soon as you generate insights for that given ticker, the AI is going to take all that data and it's going to give you actionable insights, right? And this is the future of where this is going. I mean, this is what Andrew Toy is building, right? For the Clover Assistant and Counterpart Assistant. So this is very powerful. Again, this is not available for the YouTube community. This is only available to lifetime access members through an add-on, given it's expensive to run this. This is very expensive, right? So you can see, you can learn, like for me, this was news to me. In Q2, gross margins were 30%, multi-year high. Whoa, what happened in Q2? I don't know, right? But that was when they were profitable, right? So that makes sense, right? So that's pretty impressive, okay? So imagine having that for multiple stocks, right? It just adds a layer of defense, and it's just something unique. And we're going to continue adding more capabilities to other stuff, other premium Al Stock Trade stock terminals, right? And then we're going to create chatbots that are specifically designed to pull information. And it's going to be pretty good, guys. It's going to be pretty impressive. So there it is, guys. You could see kind of where we're headed. It's really beautiful where we've come from and how long, so very excited. Let me go and look at the questions. Hi, are there historical precedents or empirical studies that analyze how a company's share price reacts to a 37% year-over-year profit? Yeah, I mean, not specifically to that degree, but you can ultimately look at, like, we did the analysis with Trump 1.0 versus Trump 2.0, but not to that level of degree. The only thing I look at is intrinsic value. But again, this is an educational platform, so don't take everything as a grain of salt. You're talking about the dilution, which is basically that what they IPO'd at after dilution. Exactly. Yes. Exactly. So recession talks is the matrix trying to get you to sell your stock. There it is, right? So break out of that goddamn matrix. Sell everything. I'm just kidding. Right? So anywho, guys, that's all I have. I'm very excited kind of where we've come. You've seen this channel grow and you've seen the capabilities of it grow. But there's one thing I want to tell you is that the promise I made to you about democratizing financial literacy to investors around the world. And now you're starting to see that in action, right? Whatever resources out there that actually will help, given my background in computer programming, we're going to go ahead and bring it to you, right? Ladies and gentlemen, it's always a privilege and honor. I'll see you in the next one. Peace.